Hey everybody, it's Nick Inman, founder of VolumeProfileTrader.com on Saturday, October 27th. And markets over the course of this week continue to fall lower. And off the back of Apple's earnings, I guess you could say the market kind of recovered. You started to see a bid to the market on a few names, including a rebound in Apple. So I think there is a chance for a potential bounce here based off of volume. We're at a level where the market should bounce. So I'm looking at the bottom of this volume level, and I'm just going to drag it across, and you can see this should be some type of support here. So from a short-term standpoint, it looks like the market has a chance to retrace. I would be looking for a pretty shallow bounce, really, back to where we had resistance, support, and then resistance. So call it around 1425 on the S&P futures. That looks like a logical level for the market to bounce to. Now, that's not a big bounce, but, for a day trade, it's not too bad. And that's kind of what I'm looking for. As for a potential bigger range, you're looking at where we are in the market right now. And I'm just literally going to draw the box up towards 1461. There's that potential too. So just keep that in mind. Now, with the election right around the corner, the market could be on standpoint on, just waiting for the results. So I would expect to see 1425 or so on the S&P in the coming days. And as long as these lows hold from Friday, and if they don't, then I would be looking down towards the 200-day moving average. It's also the top of this high volume area right here. So, call it 1380 down to 1375, and then the point of control for the year, 1362, if the market really got going. So realize that you have some levels to trade off of here, and your risk to the downside is right below these current lows. And from a selling standpoint, if you were looking to sell, the chance was a couple of weeks ago, up at the top end of the range. Now, the risk reward is not the same. If you're looking for that opportunity, wait for the bounce up towards 1425 where you'll get your opportunity to sell. Now, on an hourly chart, what we're looking at on the S&P is a little more sideways consolidation. Okay, coming up on the end of the month here, expect for some type of rebalancing. And the shorts are leaning short right now. The longs got squeezed for the most part, at least those short-term longs, and now you're looking for some type of rebalance. So what I mean by that is the point of control for the last 90 days is at this 1407.50 level. Look at where we closed on Friday. But I'm looking for this month. I'm looking for the point of control to form somewhere in this 406 to 1406 to 1410 level. And once you get that confirmation, that gives me the confidence that some type of move is going to happen off of these levels. So what you would then be looking for is, okay, are the buyers here or are the sellers here? And if you're looking at the market right here, right now, since Tuesday, the very first bar down at this range, you have had two volume bars, up volume bars, that have been above average. All of the bars above average, other than those two, have been selling bars. Keep that in mind. Just keep a mental note of it. Now, with that said, now that we are down to a quote unquote logical level where we should bounce, and what I mean by that is the point of control for the month of August, well, it's doing a pretty dang good job of holding these levels. So you would expect to see some type of retracement off of those levels. That's usually what happens. And that's why the 1425 level, which is the 50-day, the 20-day, and this average true range level, all in that, general-ish level, should provide for some type of level to trade off of. So for the S&P right here, right now, I would be looking at this support level that we have found so far for one day. at 1394 or so. And then as far as for a potential move to the upside, 1425 or so. So given where we are right now in the market, I would say the chances of a move pushing towards 1425 into the beginning or into the election is pretty likely. Now that's a shallow or a small move, so I wouldn't put too much into it, but I just want to point that out. So now that we've gone on about the S&P, how about some other names, right? So the NASDAQ broke into this high volume area, and we're just seeing a big tail. Now, there isn't really much to say about the NASDAQ. Actually, let me bring it back up. All right, the NASDAQ, I really don't have too much to say. We held, let me draw it, these lows back in early August. We held those levels pretty much to the penny, it looks like at least. But it all reflects on Apple. Apple is such a big weighting in the NASDAQ 100. You're seeing Apple originally bounced on Friday at the point of control for the year. Well, guess what? That level is breached and went down to touch the 200-day moving average, or pretty dang close. Now, this is the way I see it on Apple. If we hold the point of control for the year, so give it 604, let's give it a little bit of leeway. Let's call it 600. If we get 600 to hold on a closing basis, then I do think that you look for higher levels in Apple. So looking on an hourly chart, closing above 607 or so, which is the point of control for 90 days, I would be looking at the bottom of this monthly high volume area where we saw support. Looking up towards that range, it's also the average true range, which you can see right here where my mouse is, and then up to the point of control for the month or so. That gives us a pretty good bounce, 625 to about 630, give or take. The 20-day moving down, the 50-day moving down, all towards those levels. Now, you have to think, okay, are the buyers or sellers, who's in control right now? And given the big volume that we've seen, there's a chance for this to be bottoming on Apple. Now, the fundamentals, they missed on EPS, but from a revenue standpoint, they still beat, if I recall. So, their profits are getting squeezed a bit. However, they're still making money, and that's what's important. I do have my viewpoint personally on Apple has changed some from a fundamental standpoint. Now, their numbers, they're going to obviously overpower my fundamental viewpoint, but I think they're messing up on a few things. I personally have the 4S, and I just feel like it's been underperforming lately. It used to work like a champ. Now I just, little things that never used to happen are now happening. Of course, right here, right now, I can't think of any off the top of my head. But then I look at the iPhone 5, and it just kind of bothers me that they changed the power, the charger, because I probably have 10 chargers laying around the house. And now, if I go to get the iPhone 5, basically those are all worthless, or I have to get an adapter. And I think that's a pain. I don't see the reason for it. It doesn't make any sense to me from a consumer standpoint. And that just shows me, let's just watch that. Let's keep that in mind. Let's take a mental note. If they continue to outperform on their earnings, then, whatever. But based upon what they're doing, I just don't think it's the right thing. All right, Amazon. All right, came out with earnings. I'm going to get rid of these drawings so we don't have to look at them. Bouncing off the value, or basically the value area high for the year. You could look at this high volume area here, however you want to slice it. I'm going to do it like this. I'm looking at the bottom of this high volume area here, and you can see it ends up being pretty good support. We're seeing a monster bounce right now. This may be, and I could totally be wrong, but this may be a sell into strength sort of trade. So keep that in mind, and let's look at the hourly chart to figure out what levels we're kind of looking at. If you want to look at levels, we see the point of control for the month of July back right here. Point of control for the month of July. Never got touched in September, I'm just going to scroll it all the way across. And look at that. Not one hourly bar closes below those levels. And then after earnings, obviously, you see the good volume from the buy side, all above average, and you see a bid to Amazon. So as far as a potential target, I think that you have to look at, you could call it these current swing lows, which we saw a little bit of resistance. Let me zoom in here so we can see. All right. We saw support, a little bit of support here for a couple hours, and then a breakdown. Well, guess where price stopped on Friday, right at those levels. If we continue through, I would be looking for the bottom of this high volume area, which is also the 50-day, the 20-day, to around the top, which is up at these swing highs. It's below 248, above 245, so let's call it 246. That general range. So the mid-40s, if we get above these current levels, you have a little more push to the upside, but the trade was definitely to buy off of July's point of control. You can't catch them all, but that's why you keep these on your radar. You can set alerts at the point of control levels, and you'll realize that they end up being great levels of support resistance as long as you get the buyers to come in or the sellers, depending on what direction you're going. So Amazon, gives the thesis that a bounce to the NASDAQ and a continuation is likely. IBM off the value area low for the year. I actually like this trade. I think that you can still look to get involved. Your stop would be below 190.46, which is the current lows here. And if we continue higher, then I think IBM has a good chance to really make up some ground here. And you're looking at the next level of potential resistance, which is basically this point of control level here, the average true range, the top of this high volume area. You can see that was basically where the sideways consolidation started. So I'm just going to move it all the way over. And that's your first target on IBM. From there, you look at, okay, where is the next level of consolidation? And you can see the buyers came in, let's call it 198 to 200. That's also where the 50-day and 20-day are at. Now, from there, there's absolutely, then you have the gap close, or I should say the top of the range from the gap, which is north of 200. And then obviously, if it continues going, then you just look at these swing lows here, and then obviously the point of control for the month of September, and then the gap close. So it's up to you, whichever way you want to look at it. If you want to look at it from a selling standpoint, then you'd be looking to sell into strength. At any of these levels. From a buying standpoint, obviously, it's the opposite. Now, from the standpoint of a buyer, we broke down on some key levels here, so that's a little bit discouraging. But from that yearly standpoint, the value area low for the year is holding. So keep that in mind. And the thesis is short-term market bounce. All right, Intel. Now, obviously, this is weak from this standpoint, and you're seeing, nothing but bad news here. Just keep an eye. Look at the monster volume that's coming into Intel here from the buy side. That doesn't necessarily mean that there aren't sellers here, but the fact that the market or Intel closes higher off of these levels gives you a little bit of reasoning that, maybe we're close to a short-term bottom here. Maybe we're looking at a base. What I see is I zoom out to a 2-year chart, and the point of control for the last 2 years is still holding as support. Now, I took that as a trade back on the 15th, took profits on the 16th, ended up being obviously a good trade. You see the bounce we had. But this is starting to give you a little bit of support, and you're looking for some type of turnaround. On a hourly chart, you have the point of control for the last 90 days down here. Now, you can see that as two things. One, values migrating lower, or two, obviously, values migrating lower, meaning the sellers are just continuing to sell into any strength we see, or the buyers are beginning to come into these levels. Now, based off of what happened after earnings and the fact that we barely made new lows after earnings were printed, so here were our lows at earnings, we didn't, and I'm going to say this, we didn't have any closing bars below the lows off of that earnings, and you saw the monster volume come in. So essentially, we developed our range, the bottom end of the range, it held, and now you're looking for higher prices. Now, let's figure out what kind of higher prices we're talking about so we can get an idea of what we're looking at. On Intel, 20-day moving average obviously could be short-term resistance, but let's look past that. Let's look at these swing highs from earlier this month. It's also the value area high for the current month, and I'm also going to look at the value area low for the prior month. Why? Because it was support, and this value area high for the current month was support also. So I'm just going to say that's a trading zone. That's a level of interest because every time price came into that level, it was either support or resistance. So I would expect some type of test of that level. And then from there, you can look at these swing highs from both the current month. So you can look at, the monthly highs. And then obviously you can go into the point of control for the month of September, which was never touched. It's also the 50-day moving average. So just keep that in mind. Okay, now I'm going to go into a few positions that I have. I actually don't have my portfolio is actually mostly in cash right now. Been doing a lot of day trading the last couple of weeks just because my perception was the market to come in. Tried a few trades to the long side and, failed at them. So I've been focusing on day trading, and I day trade NASDAQ futures and kind of leaving at that. But Bristol Myers, I have some put spreads on. Sold the 34s, bought the 32s expiring in November. Earnings came out, and the market, or Bristol Myers, reversed off those levels. So really, I'm looking for this to push up towards 34. And this position's in the green, so I'm just going to let it be and stops at break even. ConocoPhillips, this continues to actually hold up fairly well after coming out with earnings, and really looking for this thing to continue to push up. My thesis on this, and I do it by looking at a longer term chart, is you can just connect the lows here and however you want to look at it, but just connect the lows and connect the highs, and I see a stock that's brewing for a breakout. And the fact that it's above the point of control for these last 3 years, that gives me confidence, and it's above the 200-day, which did hold prior to earnings. Earnings came out and we gapped above. So, we have a trading range and we can't neglect that. And I think we can draw it pretty broadly. Let's connect our lows here. Let's connect our highs. And I guess you could call this a higher low here relative to here. But you want to see this thing come to fruition, and you can see it's close to. So if this is an actual pattern, ConocoPhillips could be something that you're looking to add to. My position's about 3/4 of a position size. I actually did scale out into strength. Maybe it was back in, to be honest, I don't remember. It was a couple months ago. But it was just to raise cash and to kind of turn over my portfolio. But now I'm looking to get back into it on a heavier basis, a bigger position is what I'm trying to say. And I'm going to wait and see if we can break above these highs to add to it, just because my position's in the green. And, I just don't see the reason to add to this if the market's just going to roll over more. All right, Freeport. I think this is a name that you can still look to short. And I'm a little skeptical of saying that because I'm just not the biggest fan of short selling names. And that's not to say that I don't, because I do. But I'm just skeptical on it. We are above the 200. Our range is definitely intact. But my thesis has been, and I said to short Freeport last weekend, I also said to short it somewhere in this range. But we have our range. Here's the bottom of the range. Here's the top of the range. And we're in the middle of it. Well, now we can't get above the point of control for the year. It's just being stubborn resistance. Price can't close above it. So this is what I'm thinking. If we get, and I'm going to bring up the hourly chart, if we get any type of push up towards 40 on Freeport, and it's weak, and what I mean by weak is the average buying volume is still below, the average volume, then I'm looking to sell into strength. And I could be totally wrong by this because the 50-day moving average is still holding. But my perception is any attempt to close this gap is something that you look to fade, and your target to the downside. I do think that these swing lows back in September are worth targeting. Back here around 38 or so, we're at 39, so the risk reward probably isn't there yet, but a push up towards 40 and then a fade with a stop probably at around 41 would be useful. And your thesis here would not be that this range is still intact. Your thesis would be we are forming a lower high somewhere around the 20-day and the point of control for the last 90 days and the month of October, and you'd be looking to sell against that level and looking to break through, the bottom of this range. So I think it's a trade worth looking at. Another trade that may be worth looking at is Southern. We're holding the point of control for the year. Now, earnings are in a couple of days, the 31st. Keep an eye on that. But last time we reported earnings, we were in good hands. And this thing overall, now I'm going to just zoom out a bit. Let's go to 5 years in a week. Are we in an uptrend or a downtrend? And there's no doubt we are in an uptrend on this. And we're at, in my opinion, a low-risk opportunity. The point of control for the year, we're holding so far. You have big volume here, so it must be ex-dividend. So I would kind of keep 45.75 or so as your bogey. And the reason why is because you have a lot of moving averages there, the 50, the 200, and you have the point of control for the year there. So I consider that your bogey. Anything below, say, 45.50, you probably want to stay away. If you want to keep a stop below the Bollinger Band lows, that's fine too. So that would be below 45.41. That's probably going to fluctuate a little bit. But I think this looks good. And so far, you had out of this little bounce range, you had a breakout, and now we're testing the breakout. Now you're getting support here. So if we get, assuming once the dividend pays, you're probably going to be still stuck in this range. But as long as this 45.75 level holds or so, you could be in a good position to see some price appreciation in the next quarter or so, looking to close or touch these highs here up towards 48, collect a dividend along the way. Not too bad, right? All right. I'm going to go into some currencies. Euro, down at the bottom of the range, seeing a little bit of support. The bottom of the Bollinger Bands, 50-day moving average, all right here. So we'll see if we can hold here on an hourly chart. Failing off of this month's point of control, but I'm more concerned right here, right now, about last month's, which held like a champ earlier this month. And we're just going to have to wait and see. Now, going into the next month, which we have Thursday is the first of the month, we need to see the euro reclaim the point of control for the month of October. So it needs to get back above 29.72, but you would expect that. Trading in this range, you would expect nothing more than it to retest the top of the range. So if we don't do that and we get some type of potential rollover, some type of failure around, well, it's the 50-day moving average too, but the point of control for the 90 days, then the point of control for October, then you're looking for a little more downside in the euro. And in that case, there's really nothing until you get into this cluster here. So it could really slide some, and you just need to keep that in mind. So the point of control for the year, still stubborn resistance. And until that changes, I personally believe the trade on the euro is to sell strength. Short-term, oversold bounce, sure. But I just don't think it's worth it right now. The dollar, on the other hand, up towards the top end of the range, so opposite of euro, you're looking to sell the dollar. Now, this thing is above its point of control for September, above it for October. As long as it holds those levels, we're good. Now, we're seeing resistance at the 50-day moving average, and it's literally stubborn resistance. Huge selling coming in, so keep that in mind. But you also saw a nice buying tail off the point of control for the month. So there's your mini trading range on the dollar. 80.35, let's call it, on the on the upside, 80 on the downside or so, and you kind of take your cues from there. The buying volume after those 3 sell bars were not big at all, so maybe we do get a sell into strength, which would support a market bounce. Now, gold gave you the short-term bounce at 1,700 that we talked about, which was simply the bottom end of this range, and we saw the bounce, but really, to be honest, this looks kind of weak, and I'm not sure if this is something that you want to be a part of right now. Now, we are at the bottom end of the range. If we see some type of retracement, I would expect nothing more than 1730, and then you have to reevaluate the position. The reason why is because, so say we're at the bottom end of the range here. 1730 would simply mean a retracement to where we saw support earlier this month, and then resistance, and then basically a gap close. The 20-day will catch up to those levels, so it will be in that general range in the coming days. Just keep that in mind, and any bounce should be sold into. Now, with that said, as long as 1,700 holds, the buyers are in okay condition. So, just kind of gonna leave it at that, as boring as it sounds. Oil continues to move lower, and this is the last name I'm going to talk about tonight or this weekend. And the reason why is because oil, as it comes down, I think it's nothing but a positive for equities, for the consumer. And I think that's good news. I think that's something that you want to take note of and realize that, okay, as long as oil keeps moving lower, the potential for consumers to have more money in their pocket, and, albeit it's not much, but that's a good thing, and you likely see some type of underlying bid to the market in that circumstance. Taking where we bounced on, the end of this week, we're at levels where, okay, we saw resistance, and then we saw support. So what would you expect? You would suspect some type of support here, and some type of underlying bid to oil, whether it's some short covering or whatever. A likelihood of an oil bounce seems very possible, and you want to take note of it. We're also at the value area low from back in July, the 90-day value area low, which, let's see, almost bounced to the penny off of these levels. So what I kind of see is, I'm going to draw this, so we connect our highs, and we see a little bit of a breakout here. Not good volume, so I won't take too much into that. And now we see our lows. So maybe we see some type of retracement back up to the gap, the value area low for the month of October. And from there, it's pretty good news, from a trading perspective. So overall, my thesis is I think you can look to buy this market. The VIX probably has a little more downside, 1732. It's a decent move. And then I would like to see it test 1665. If you recall, talking about 1665, talking about 1919 was good resistance, and we should see some type of support at 1735. However, if we slice through that, which I suspect we will, the mid-16s is where I would be looking for a target and looking to see if the buyers are going to buy volatility. So anyways, I hope this helps. I hope it serves you. Continue to trade well. Focus on your levels. Focus on the trend, and you'll do fine. If you're not a short seller, then be fine with raising cash. There's nothing wrong with it. Keep in mind multiple time frames and kind of take your cues from there. So anyways, take care. Have a great weekend, and I'll talk to you next time.